Hi, this is Kirubakaran Rajendran. Welcome to Trading with Groww channel. In this video, we're going to talk about ATR indicator. Compared to all other indicators, ATR indicator is totally different. You can consider moving averages, you can consider RSI, but ATR indicator is nothing but average true range. It clearly tells you what is the volatility of the markets. So based on which people can decide what kind of trades they can take. So average true range calculates three different ranges and calculates the overall average movement. So first it checks what is the current high minus current low, and then it checks what is the current high minus previous day's close price, and then also it checks what is the overall difference between previous day's close price and current low. So by adding all these together and it calculates an average range that tells you what would be the volatility of the market. So first let's see how you can apply a normal ATR indicator in your Groww terminal, and also I'll tell you a difference between a normal ATR which is in absolute terms versus what is the ATR in percentage, what is the main difference between these two, and also I'll explain how you can decide your trading strategies or how you can trade, whether to go in a call option buying or a call option selling, whether to be in option buying mode or option selling mode based on these ATR indicator. So this is the Groww terminal where you're seeing Bank Nifty chart. So first let us add the average true range. So if you type average true range, you would be able to see multiple things, and this is the one you need to select, average true range. And this is going to plot the average true range. By default it will plot for 14 days. So as you can see, the market gets into a range contraction and range expansion mode. So whenever this average true range is on a downward decline, which means that there might not be a big volatility in the markets. But once this ATR movement starts going up, we can expect a bigger volatility in the markets. So that is exactly what is happening from December onwards. If you see, prior to December, the overall range was going down, but after December, the range was going up through this ATR. See, basically how you can check the ATR with respect to indices is, for an example here, if you see in December, the average true range was around 380 or 400, which means that on a daily basis, Bank Nifty can move up 400 points on the upside or can move down 400 points on the downside. So by December, Bank Nifty was trading around 44,000. So which means that Bank Nifty, based on this ATR movement, from 44,000, it can move up 1% on the upside, like 44,400, or it can go down 43,600. So that is what this ATR means. So since this ATR is increasing as the days goes on after December, maybe because of upcoming budget session, the volatility was expected to move. So now if you see, the average true range is approximately 687, which means that from whatever the price Bank Nifty opens in a day, it can move up 600 points or move down 600 points. The range gets expanded. So this is how you can gauge the volatility of the markets. So if you wanted to know whether the market is going to be super volatile or not, that is totally possible using this ATR. So that is why if you see before December, all these bars, if you see, it is a very minimal bars, which means that the overall range is very narrow. The whole day the Bank Nifty was not moving more than 400 or 500 points. But after January onwards, if you see, the overall movement itself is greater than 600, 700, 800 points. So this is what the volatility indicator ATR determines. So the current chart that you are seeing right now was Bank Nifty chart. I've opened it in trading view. But if you see this ATR, I have added ATR indicator in percentage terms. So instead of adding it in normal ATR, there is an option where you can add ATR in percentage terms. So that will show you how many percentage this specific index or the underlying instrument is going to move based on this ATR indicator levels. So earlier we saw ATR in absolute terms, now we are seeing it in percentage terms, which means that see, currently the ATR percentage is 1.6%, which means that on a daily basis, Bank Nifty can move up 1.6% or move down 1.6%. So people who are option sellers, what they can do is they can do a short strangle, which is 2% away from Bank Nifty. So as per ATR indicator itself, it is saying that okay, we can expect a 1.6% movement. So you calculate a 2% range. So say suppose if Bank Nifty is at around 40,000, you calculate 2%, which is 800 points. So you can do a short strangle 800 points away from the spot, so that based on the ATR levels, you see the volatility is only 1.6%. Since you are doing a short strangle 2% away from the spot, the probability of market going in a one-sided direction might be very minimal, and you might end up in a very good profits. So this ATR in percentage terms is much useful than ATR in absolute terms, because you can check this in a weekly basis also. So if I select weekly, then you can see currently the weekly ATR level is around 3%, which means that on an average, Bank Nifty in a week can move 3%, 3.2%, either on the upside or on the downside. So people who are doing a positional trading, they can easily check know the overall ATR percentage, and accordingly they can do a short strangle strategy, which is bit away from the ATR levels. Say if Bank Nifty weekly range is 3%, you can easily short a 5% away OTM strangle. This way the overall range is not going to be breached, and you might end up in a very good profits. So this ATR percentage keeps changing as you keep changing the time frame. So the monthly time frame it is around 6%, and weekly time frame it is around 3%, daily time frame it is around 1%. So that shows what would be the expected move of the underlying based on this ATR percentage. So now let's see how you can trade either option buying or option selling using ATR. How to decide when to do option selling and when to do option buying. See, now consider that you are a positional option trader and you wanted to get into an option buying or option selling mode. So what you can do is go to 30 minutes time frame. You will have this ATR indicators in absolute terms that will show a chart, and above there is a price chart. Now you apply Supertrend indicator in this chart. So now I've applied Supertrend indicator. So as you know clearly, whenever the green signal comes, you just have to buy it, and whenever the red signal comes, you just have to short it. Now, how do you decide whether you should when the buy signal comes? How do you decide should you buy a call option or short a put option? So that should be based on the ATR indicator. So whenever a buy signal comes, check what is the trend of the ATR. If the trend of the ATR is going up, then what you do is buy a call option. So you got a buy signal in Supertrend. So instead of directly going and buying a call option, you check the trend of the ATR. And if the trend of the ATR is going up like this, where you can clearly see, let me show you. So this is the trend of the ATR. So it was going up, so which means that you buy a call option here. And then after this level, after 15th February, the trend of the ATR is down. So what happens is you can book your overall call trade, the call buying option trade. You just book it in profit, and from this time onwards, after 15th Feb, once the trend of the ATR starts declining, you short the put option, because when the ATR declines, it means that the volatility is going down, and when the volatility goes down, the overall IV of the options also cools off. So you might not make good profits if you are an option buyer when ATR declines. So once the ATR starts declining, you book profit in your call option buying and short a put option, so that once the ATR declines until this place where the buying is still on, so by shorting the put option, your overall premium decay will also happen and you make a good profits. So always remember, when you buy based on super trend, check what is the overall trend of the ATR. If the overall trend of the ATR is down, then you short the respective options. If the overall trend of the ATR is up, then you buy the respective options, and you can use the stop loss totally based on the super trend value itself. So this ATR doesn't give you a buy or sell signal like other indicator, but it tells you exactly what is the volatility in the markets. Accordingly, you can decide whether you should buy or short the options. So this is how you can use ATR indicator in your trading systems. So be it whatever the methodology that you choose, if you already following any specific trading signals that tells you when to buy and when to sell, you can continue to follow that. But in addition to that, you check what is the ATR levels. If the ATR is on a rising mode or it is on a declining mode. If it is on a rising mode, it is good to do an option buying system. And if it is on a declining mode, it is good to do an option selling system. So this is how you can use ATR indicators effectively in your overall trading methodology. So I hope you found this video really helpful. In case if you have any doubts, please post it in the comment section. I'll address it. Bye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.